Hey guys, welcome back to the channel. I hope everyone is doing well. So recently, Pestrichelli had an interview on Twitter Spaces with Michael Gayed's space. So originally, I wanted to drop off like part one last week, and then because they had to reschedule because I think there was some issues with Twitter Spaces, but I decided to like maybe just easier just to combine both of them for today. So this happened on Monday afternoon. So, did Jay Pestrichelli say anything interesting? So, from the first part, they had like they mentioned that they started 7:30 in the morning, like for the meetings to go over their positions. So it's kind of like a day in the life type of story. And then they also mentioned like sometimes like depending on like the position, they have to do a lot of roles. So I think like most of us already know this. But then, like, the interesting part is, like, sometimes, like, when there's a lot of inflows and outflows, that could be a pain to manage. And I think I've touched on this before. Like, sometimes, like, people crowd in and out of positions, and it kind of messes things up for these ETFs. Uh, and I just noted, like, there was only 60 people in attendance. I think it's just because, like, Twitter Spaces, I think there's for people that had phones, they couldn't get in or something, so that's why they had to reschedule it. And then it's interesting to note that Tidal is sort of like an ETF white label company. So I think for people that want to start ETFs, they help the guys like YMAX, Defiance. I think they help some other companies. I remember like I don't want to say for certain, but I think like Roundhill or something like that. They also use Tidal, but don't hold me to that. So the CIO of the Tidal company is Michael Venuto. And then there was also like a portfolio manager from Tidal named Dan Weiskopf. And then like in part two, like which happened on Monday, they talked about like the ideal scenarios for the cover call ETFs. So most people want like a slow move up. So this way like they can kind of capture the long call appreciation. And then also ideally you want to like finish like just below like the short call as well. And they were talking about like coin and AI examples and how there's a lot of volatility in those names and that causes some issues. And they also mentioned like time decay is a very important factor, but again, I think most people already know this for covered call ETFs. And this time, like I think they did a lot better. Like they had up to 375 listeners that I noticed. Sorry about that. And again, do you want like slow move up? Let's see. So they also mentioned that like the primary goal, they're I think most people already know this, but it's like an income first type of ETF. And then like also they try to put in like extra trades when it's available. Like for example, if they need to roll. So they mention if like for example like the short call, if there's very little juice left, it doesn't make sense to hold on to it. And then like depending on how the position is going, they'll probably roll down to maybe like the next available strike. But those are it's kind of like a nice to have when it is available. And they also mentioned a lot of like cover call like 101 type of information. They mentioned like that it's just because like the structure of like this type of position, it's not designed for outperformance. And ideally the team looks for implied volatility and investor interest when trying to gauge interest for like the next set of like ETFs. So originally they mentioned that they did have a sorry, Berkshire ETF lined up, but because it's such a like low yield, I think they mentioned it's only like 4 to 5%. They decided to pass. So ideally, they would like to have like popular and higher price stocks because it's also like good for individual investors. Like they mentioned, for example, Nvidia, since there's a lot more strikes that they can do, and also it's just like a better value. It's like for example, if you want to do a cover call in Nvidia, you need like $60,000 worth of the stock just to do like one versus like the Nvidia itself is like $20 or so. So that's one of the considerations. And they also mentioned that there's like definitely more efficiency with the ETFs because like I guess it's kind of like group buying power, and then also volume was also like a very important metric that they look at. And this person, I think one of the other people mentioned that they're part of like this ETF think tank .tidalfinancialgroup.com. So you can also like visit this website like when you have the chance to, just to see like the white papers and stuff. And again, like Jay also always like stresses again that like the benefits of using like a drip, uh, and then also like you want to like kind of like reinvest your dividends, your distribution, so you can get benefit from like the compounding effect. And then they also talked about like YMAX and that how it was like a community idea. And then it was kind of like more of like kind of like some marketing rah-rah speech. And I thought it was okay because like this is a new product, so and it's also like a popular idea. And they also mentioned it's equal weighted. So I'm of two minds of that, just like for myself. I'll maybe I'll keep my opinion to myself. I think there might be some chance for outperformance if you weight certain ones like heavier, but more than that in a second. And there was like a blurb that they mentioned like we shouldn't care about like the underlyings within the YMAX, which I thought sounded kind of weird. But I guess that kind of makes sense since you have like so many you have a diversified product, so like you're more interested in the potential income distribution, and then also like this will help cut back on any price depreciation. So they mentioned it's a simple package of alternative income. Again, they mentioned it was equal weighted. And then they also mentioned something interesting. When will YMAX update with new funds? So ideally they want to see at least 1 month of distributions before they can put it into like the new YieldMax ETF. Like for example, if just off the top of my head, I think they mentioned MicroStrategy. So like MSTY eventually, if when that comes out, they'll probably wait for like 1 month of distribution before adding that into YMAX as well. And they also mentioned the efficient frontier of having a diversified portfolio, and that in theory, it should also cause less volatility. So this might be good news for people that kind of stressing with Tesla. If you have like YMAX, this might help ease some of the pressure. So this, they want to also talk about having this as maybe kind of like this as like a mini index with potential for better Sharpe ratios and Sortino ratios. And also they mentioned possible tax efficiency potential, like for example, like tax loss harvesting. So if you have losers from Tesla, then you can kind of offset that, use that as a kind of like a tax shield for other like maybe in the future like Coney rises back up again, like you can kind of off maybe get like some tax benefits from there. And then also in the near future, I think this is probably my favorite part of the whole talk. They mentioned MicroStrategy, Zoom, GDXY, which I kind of did a video recently on too. Like these might be coming sooner rather than later. And what really got me excited was they have like this ultra fund, and I also covered this in a previous video as well, so you can check that out at your own time. And they also mentioned like for European our friends in Europe that they're trying to work in a way that to get these products over there as well. So hopefully, good news for our European friends. And this is a funny thing, like they really don't like the term nav erosion because it's technically an incorrect term. And they also, again, they stress like the cover call structure, like you're forfeiting upside. And I'm glad like Jay didn't kind of dance around the issue. He just like went for it like full on. And he called it as more of a nav lag effect versus the underlying. So it's pretty interesting that he didn't just like shy away from it. And he also mentioned that doesn't affect all YieldMax ETFs, which I think is also important too. Like I know like Tesla is like a favorite punching bag, but the other ETFs for the most part have been doing okay. And then also again to kind of help offset that, they mentioned that diversification and DCA, like dollar cost averaging, this could help offset so-called NAV erosion. And they also stressed that it would help. It's not going to eliminate all the so-called bad NAV erosion. And this is interesting too. Like they mentioned, like don't try to short because if you short, like you have to actually borrow the shares and then you have to pay the distribution. Like so, you have to like if you're a short seller, you have to kind of take that into consideration. And I'm really glad they mentioned this as well. Like they mentioned that inverse ETFs are still in the pipeline, so I'm really glad to hear that. So and then there's also a possibility of having a reverse split. They mentioned it's on their radar, and just to kind of like help, because I'm not a fan of this, but like they mentioned that your overall yield will stay the same, everything else held equal, and the market value stays the same, and they will give us like 10-day notice, like either with a press release and any mention, and they'll mention put this on the website as well, so we'll have plenty of time to take this into effect. And then they close with like a nice thank you from Jay. First, like they also mentioned, like you have to understand covered calls, and then just thank the community for their support, and they look forward to having some more. So I am also too. So I think like just overall, like I think it was a pretty good talk. Uh, and they also mentioned like implied volatility is like the emotional part of an option. So I thought that was a pretty interesting thing to note. And just for myself, like I think we still need like other forms of income-based investments just to kind of round out our portfolios in general. And then just like the general risk, again, like they really stress like it's unlikely to have good capital appreciation, and they kind of kept hammering this. So just to note that yields won't be consistent month to month. And I just want to say thank you for everybody that's subscribed recently. Thank you very much, and I hope you like this video. Please consider hitting the like button and subscribing, sharing, all that kind of good stuff, and help Panda beat the algorithm. Thank you for watching. I hope people portfolios improve, and hope you make some good money out there. And I'll see you in the next one. Bye now.